Hello friends, how are you? Vishwanath Dasika, right? In this video, we are going to see the illustration number 12 from final accounts. That is what we can call financial statements of a sole proprietorship form of business, right? In this video, we are going to see the illustration number 12 from financial statements, which has six adjustments, but including here what we can say is see if here five adjustments, okay, and 1 2 3 and 4, that means 5 6 plus 4 10 adjustments, 5 plus 4 9 adjustments we can have, we can see here totally, right? Let us see. First of all, we can discuss the adjustments, but before going to the adjustments, we shall read the thing. We have to prepare trading profit and loss account for the year ended 1st March 2020 and also balance sheet as at date after making the provision of the following. That means we need to have these adjustments, right? Let us see. For the adjustments, I am going to discuss adjustments first and later we can go to the problem. And before going to these adjustments, let us write working notes. Of course, after creating the proformas, I have already created the proformas for you. Okay, after creating these proformas, we have to write these working notes, but that is not mandatory that first we should write only these things. We can do the adjustments also. But the order is that we need to do working notes at the end of the question, right? Let us now see working notes. Working notes number one. First of all, depreciation to be charged to profit and loss account. As it is loss, it is to be charged to profit and loss account. That is debited to profit and loss account, right? And this is the first adjustment we can see. Depreciation. Building is to be depreciated by 5%. Let us have a building value here. Building, yeah, building by 6 lakhs. First of all, we write here buildings. So 6 lakhs into 5%. Make use of a calculator, which is 30,000 rupees. Okay, this is buildings. And what we are having next, furnitures and fixtures by 10%, but it is included with one more thing. One steel table purchased during the year for 14,000 and was sold for the same price, but the sales proceeds were wrongly credited to sales account. Here there is a rectification of error, so we need to rectify this error and we need to pass the necessary entry. What happened? We need to depreciate by furniture by 10%. Okay, the we can depreciate for only the balance of the furniture, right? Furniture and fixtures, we need to depreciate the balancing figure, right? But before going to that one, we need to rectify this error. One steel table was purchased during the year for 14,000. First of all, let us see some furnitures and fixtures account. Let us have the adjustment. Let us say that there is a balance of rupees 1 lakh. Let us see, this is an assumption, right? And they have said that we have purchased an asset for 14,000. Don't go for the sold sale okay. uh, we purchased one asset, they have not mentioned the date of the asset, right? Furnitures and fixtures account, it are to bank account with, this is the journal entry. So here the to bank account by 14,000 rupees, right? What they said is, and this was sold for the same price, that means no profit no loss. When at the time of sale, we have to write the journal entry, which is bank account debtor to furnitures and fixtures account, as the asset is sold, that would be created, and we are receiving amount in bank, that means in check or any form. So debit what comes in according to real account rule, right? A bank account data to furniture and fixtures. This is the entry we need to pass. So buy bank account by 14,000 rupees. But what happened? This entry is not at all recorded here. Not at all recorded in furniture and fixtures account, but they wrote the entry bank account data to sales. This is what they wrote the entry. This was wrongly created to sales account, right? They wrote this is the correct entry and this is the wrong entry. This is to be rectified. For which we write the entry sales account data to furnitures and fixtures. Right, sales account we need to reverse the wrong entry and we shall merge the correct entry and wrong entry, right? Reversal of wrong entry. So sales account data to furnitures and fixtures account, so sales is to be deducted by 14,000 rupees and also the furniture is to be deducted by 14,000 rupees. This is what we need to adjust here. So let us have here furnitures and fixtures. So there is a balance of 2 lakhs 14,000. Why we can see here 2 lakhs 14,000 balance and we need to deduct with 14,000 which is steel table purchased. So for the balance of rupees 2 lakhs we need to depreciate by 10%. So the balance would be 20,000 rupees, right? This is the adjustment regarding furnitures and fixtures. Now comes the third adjustment which is office equipment by 15% and it also includes one adjustment which is purchase of typewriter during the year for 40,000 has wrongly been debited to purchases. So that means what? There is a asset purchase. Let me erase this all things so that there is no. Okay, office equipment by 15%. Okay, it includes the depreciation will be charged for balance of the assets, right? And it includes that a purchase of a typewriter during the year by 40,000 rupees. But that has wrongly been debited to purchases. Same thing, right? If we have purchased any typewriter, the typewriter is office equipment, right? We write the entry that office equipment account data by 40,000 to bank account 40,000 rupees. But this is not what they have recorded. They have treated this purchase of a typewriter as purchases. That is, they purchase that as goods purchase. They have written this entry as purchases account data to bank account 40,000 rupees. So we need to, this is the correct entry which is to be incorporated. This is the wrong entry. So we need to reverse the wrong entry and we shall merge with the correct entry, right? For which we write the entry office equipment account data to purchases. So increase the office equipment by 40,000 and decrease the purchase by 40,000. So what we do here is we shall see the purchases and we shall take a dot sales also and sales is to be deducted by 14,000. Let us write it here and the sales added by sorry purchases is also to be deducted, right? 40,000 rupees we need to deduct this one and you know the reason why we need to deduct. So let us erase this one also. Now let us see. Okay, and the office equipment we need to increase by 40,000, right? Let us see the value of office equipment which is provided here 1,60,000. So that comes office equipment 1,60,000 and plus 40,000 we need to do, that would be becoming 2 lakhs rupees and at 2 lakhs we need to increase direct, we need to depreciate by 15%. 2 lakhs by the help of calculator we can say that this value is 30,000 rupees. And next one is what? Next one is Motor car we need to depreciate by 20%. What is the value of motor car? 2 lakhs rupees. So let us write it here, 2 motor car depreciation. So 2 lakhs we need to depreciate by 20%. That would be becoming 40,000. So what is the total value of depreciation to be charged to profit and loss account? And this is what amendments to be shown in the balance sheet also. So we can see 30 plus 20 50 plus 30 80 plus 40 120,000. So this is the total depreciation to be charged to profit and loss account. Let us write in the debit side of the profit and loss account. Let us treat that there is a value up to here of the trading account, and the remaining comes to the profit and loss account, right? 2, let us have it in here, 2 depreciation. In bracket let us write working notes number 1, so that there is a value of 1,20,000. So we shall see that things. And now comes the second adjustment. Let us write that one. Okay, value of closing stock, which is 4,40,000. So we have taken half of the adjustment here, and the second impact is to be shown in the balance sheet of asset side. What we do is we shall go through like this only. Buildings we have, right? Buildings let us write in the balance sheet first one. Buildings we are having 6 lakhs value, and 30,000 is the depreciation. Buildings 6 lakhs minus depreciation at the rate 5% depreciation, which is 30,000. So remaining value is 5,70,000. And next one we have is furnitures and fixtures. Let us write the furnitures. As place is not sufficient, I am writing in short forms. We need to write in long forms in questions. 2,14,000 and minus so sale of what we can say, a table. We have sold the table, right? Minus 14,000, and the balance is 2 lakhs rupees. And for 2 lakhs we need to depreciate by 10%. Depreciation at the rate 10%, which is 20,000. So the remaining value is what we can say, which is 1,80,000, right? And now we are having again office equipment. So office equipment 1,60,000 they said, and we need to add with the typewriter purchase by 40,000 rupees. That would be becoming 2 lakhs, and minus depreciation at the rate 15%, we need to depreciate by 30,000 rupees. 2 lakhs minus 30,000, which is 1,70,000 in outer column. And next one is what, motor car. Motor car we have the value of 2 lakhs rupees, and minus depreciation at the rate 20%, which is 40,000. 40,000 depreciation is to be done, right? Minus 40,000, 1,60,000 in outer column. So we have done with the total adjustment of depreciation completed in fully. So we have recorded this office equipment, furnitures and fixtures, buildings and motor car, right? We have incorporated all the things now. We have shown that in balance sheet also. Now let us go through the second adjustment, which is not that one. Value of closing stock is 4,40,000. Closing stock, trading account credit side due to matching concept, according to matching concept, and it is should be shown as current asset in balance sheet. So let us write down that same thing. Here I am writing by closing stock by 4,40,000, right? And let us show that in balance sheet also. Here in thing closing stock, this is 4,40,000 rupees. So we have seen this total adjustment completed also. Now 2 months go down rent is outstanding. So let us have the second adjustment, which is second working notes, go down rent. Go down rent is what? They have given us that the total go down rent paid is what? 55,000. So this is what for 10 months. Uh, Plus we need to pay for again 2 months, right? Because according to accrual concept, what is to be incurred in the current year, we need to incur that one. But what will be the value for 2 months again? We need to find out. So for 10 months, they have provided 55,000 rupees. Then for 2 months, what would be the value? That is by unitary method we can see. So that is 2 by 10 into 55,000. By calculating, we can get this is 11,000 rupees. And it is to be paid, right? So we can say this is outstanding rent. Outstanding rent, that is payable rent. So totally 66,000 rupees, which is to be shown. Okay. As it is outstanding rent which is payable by us, so we need to show this as liability. Let us have that one liability side also. If we take this adjustment firstly, then there is no uh, sort of difficulty in the problem. So it is an outstanding liability, right? We can show in the liability side. So outstanding rent for go down, we can write it here. Outstanding rent for go down by 11,000 rupees, and we need to show the go down rent, right? Let us have here to rent for go down. So 55,000 totally, and plus outstanding rent by 11,000 rupees is outstanding. So total we need to write 66,000, right? That means what rent for go down is also completed. Let us see. And now comes, I have discussed with you the third adjustment also. Now comes interest on loan from Vishwanath is payable at 12% per annum, but this loan was taken on 1/5/2019, and we see that we have closed the books of accounts on 31st March 2020. That means the financial year would be 1/4/2019 to 31st March 2020. But this was loan which was taken on 1st May 2019. That is after 1 month of incorporation, after 1 month of the business, we have taken a loan for some value. So that is on 1/5/2019 to 31st March 2020. The loan is for only 11 months, right? Loan is for 11 months. What they said is interest on loan is payable for 12% per annum, right? Interest on loan from Vishwanath, right? Let us see. A loan from Vishwanath which is 3 lakhs rupees. So that would be the third adjustment for us, third working note. So interest on loan, right? Interest on loan we are having. Let us calculate total interest payable for 11 months actually, which is 3 lakhs we are having, right? 3 lakhs is the loan from Vishwanath we have seen now only. 3 lakhs is the loan, and at which 12% 12% we need to find out, and for 11 months we need to calculate, right? Which is what? So 3 lakhs into 12% into 11 divided by 12, 33,000. So this is the actual interest which will be payable for the loan. But what happened? Interest on loan from Vishwanath we are having 27,000 rupees according to the trial balance. Actual interest paid, actual interest paid which is 27,000 rupees, right? But what is the difference here? This is what 6,000 rupees, which is not yet paid, that is payable. So outstanding interest on loan, we can say that is outstanding interest on loan. Outstanding interest on loan which is payable, so this becomes the liability. Here we can write in the liability side, interest on loan outstanding by 6,000 rupees, we can say. Okay, 6,000 rupees. But what we need to write it here is 27,000 is the total paid interest on loan. This is to be done, and plus outstanding interest is also there, outstanding by 6,000, and that would be what, totally 33,000 rupees, right? Let us debit that one also. To interest on loan, we can write it here 27,000, which is paid by us, and plus outstanding interest by 6,000 rupees, which is totally 33,000 to be shown. Outstanding rent also we can write it here. To outstanding rent 66,000 total here, and here there is a total value of 33,000. That means what, we have taken this interest on loan from Vishwanath also, right? Now let us go through the next adjustment. Very simple adjustments these are. Okay, interest on loan completed. Fourth adjustment, incorporation also been completed. Provision for bad debts is to be maintained at 5% on sundry debtors, right? No problem. So let us make a small note for this one also. That is fourth one, provision for bad debts. Actually, there is no need of this one, provision for bad debts. To understand, I'm writing. So provision for bad debts. What is the provision here? They have said that we need to provide for bad debts at 5% on the sundry debtors. 8,60,000 here. There is a value of sundry debtors for 8,60,000. So actual provision is to be made is 8,60,000. So this is what, 8,60,000 into 5%, which is 43,000. So provision made is 43,000, and actual provision according to trial balance. If we have any, we can write it here. If that is not there, then there is no need of this one. And here we can see, yeah, after loan from Vishwa, there is a provision for bad debts. Provision for bad debts, here we can see 30,000 rupees. So they have already created the provision for 30,000 rupees, right? So what we can say, the trial balance provision is old provision, and the new provision is 43,000. And we have discussed this one also. If new provision is greater than the old provision, so the difference, which is 13,000, is to be debited to profit and loss account. 13,000 is to be debited to profit and loss account, and new provision of 43,000 is to be deducted from debtors in balance sheet. Whether it may be old provision or new provision, then we need to deduct only the new provision from balance sheet. From debtors in balance sheet, we need to deduct only new provision. That is the rule, right? Because this belongs to the current year, but the extra provision which is to be made by us is 13,000, that is to be made. So that would be, here this 30,000 is already existing. That means we need to create more provision by 13,000 rupees. So in the next year, in trial balance, we can show that here provision for bad debts by 43,000 directly. In next year, this would be showing in the balance, trial balance, right? This is what we can understand. This is what logical thinking is, right? Let us see. Okay. This is what fourth adjustment. We have completed this one. So provision for bad debts, we can write it here to provision for bad debts. By 13,000 rupees, don't write 43,000. And here we can have sundry debtors 8,60,000 and minus provision for bad debts. By 43,000 we need to deduct, right? 8,60,000 minus 43. This is 8,17,000. This is what we need to write. So we have seen this adjustment completed, right? Insurance premium includes 40,000 paid towards proprietor life insurance policy, and the balance to the insurance covers a period from 1/4/2019 to 30th June 2020. And we have already seen what is the year for us: 1/4/2019 to 31st March 2020. But the insurance period is 1/4/2019 to 30th June 2020. That means extra of 3 months is paid already. 3 months has already been paid. Extra 3 months is paid. That is prepaid insurance, what we can say. So the fifth adjustment, fifth working notes is insurance premium. Right? According to trial balance, insurance premium is what? Let us see. Insurance premium, where it is rates and taxes, discount allowed, freight on purchases. Here we have insurance premium. Insurance premium we are having 55,000 rupees. According to trial balance, 55,000 is there, and we need to deduct this 40,000 here because this is related to the capital proprietor capital side. So we need to deduct this one from this insurance premium, that is not to be included here. We can write it here less. For proprietors life insurance policy, we can say by 40,000 we need to deduct because that does not belong to insurance premium, right? 15,000 rupees. Remaining is 15,000, and this 15,000 is for 15 months. Implies for 12 months is what? So what we can write here, 12 by 15 into 15,000, and so that we can write this is 12,000 rupees. So what is the remaining balance? Remaining balance is rupees 3,000, which we can call prepaid insurance premium. Insurance premium is prepaid. Prepaid insurance is an asset for us, right? We can write it in the asset side. So here what we can say, prepaid insurance by rupees 3,000, and this is to be deducted from the insurance in trial profit and loss account, right? Here what we can say to insurance premium, so we have 55,000 balance and minus related to proprietors, which is 40,000 we need to deduct, and minus prepaid insurance, which is 3,000 rupees. So the balance would be 12,000, what we have calculated that one, right? This is what we need to show. We have completed all the adjustments. Now we can go to the trial balance. Very simple and easy to solve the remaining things, and we shall go from the starting onwards. So cash in hand 14,000 we can write at the end of the balance sheet because that is closing balances, right? Cash in hand we can record 14,000, and we are also having cash at bank. We shall see this one also. Cash at bank, rupees 26,000 is cash at bank. We have completed this cash in hand, and we can complete that one. Cash at bank 26,000 rupees. 26,000. So let us complete that one is as full as possible. 26,000 we have completed this one. Sunday debtors has already been completed, and stock as on 1/4/2018. This is what opening stock we can have, and two opening stock we can write it here. Two opening stock. Opening stock value is what? 6,20,000. And now we are going. We have to write here two purchases. Purchases is what? Uh, Now we have completed the stock also, and now comes the motor cars value. Motor car we have, sorry, motor car, not motor car, sundry creditors by 4 lakhs 30. That is liability. We can have here sundry creditors. What is the value of sundry creditors? 4 lakhs 30, I suppose. Yes, correct. So this is what? 4 lakhs 30. 4 lakhs 30. We have completed this one also. Now comes the purchases by 14 lakhs. To purchases by 14 lakhs, and we need to deduct with purchase returns. We need to deduct with purchase returns by rupees 26,000, by 26,000 rupees, and also we need to deduct with typewriter, which is purchased for 40,000 rupees. We need to deduct both, right? So 14 lakhs minus 26,000 minus 40,000, which is 13 lakhs 34,000. And now we can go to we have completed purchases and purchase returns. Now sales and sales returns. Sales 23 lakhs. Sales returns 42,000. Buy sales 23 lakhs. 23 lakhs. And minus returns what we can have 42,000. And also we need to deduct with the steel table by 14,000 rupees. We have discussed right here. This 14,000 is what? Sales returns. Not sales returns, actually, not that is deducted as sales. And here 40,000 is to be deducted from purchases, right? So we have deducted from the sales also 23 lakhs minus 42,000 minus 14,000, which is 22 lakhs 44,000. We have completed the sales returns also. Now we can go for the salaries. Now we completed sales also. Salaries 1,10,000. Two salaries 1,10,000. 1,10,000. There is no adjustment regarding salaries. Completed. Now comes rates and taxes. Two rates and taxes 21,000. 21,000 rupees. We have completed this return taxes also. Discount allowed to debtors 24,000. To discount allowed, what we can write it here? To discount, which is 24,000. And now we can have discount received from the creditors, which is 16,000. By discount received, I am leaving the space for the gross profit. By discount received, which is 16,000 rupees. Right, we have completed this one also. Freight on purchases, this is direct expenditure. To purchase on furniture 12,000. To freight on purchase, this is 12,000 rupees. We have completed this one also. And now comes carriage outwards. It is, if it is inwards, then we would have written in trial trading account. As this is carriage outwards, we need to write in profit and loss account. Right, carriage outwards, which is 20,000 rupees. So to carriage outwards, 20,000 rupees. Correct. Yes. Drawings, we need to deduct it from the capital. We need to deduct the drawings from capital. Let us have the capital balance. First of all, capital account was 16 lakhs 20,000. So let us write capital first of all. Capital 16 lakhs 20,000 and minus drawings we are having 1 lakh 20,000. And also we are one more we are having which is related to insurance, which is 40,000. This is also to be deducted because it has been paid. Okay, if we are having any profit or net profit or net loss, we can write it here in there to the capital things, right? Now what we have printing and stationery drawings completed. Printing and stationery 18,000 to printing and stationery 18,000 rupees. Electricity charges 22,000 to electricity charges 22,000. Okay, we have completed these electricity charges. Insurance already completed. General office expenditure 30,000 to general office expenses 30,000 rupees, right? Bad debts 20,000 to bad debts 20,000. As it is given in trial balance, there is nothing to be done to the sundry debtors in balance sheet. Okay, bad debts is what? 20,000 to bad debts 20,000 rupees. Okay, bad debts completed. Now comes the bank charges by 16,000 rupees. Two bank charges 16,000 rupees. Motor car expenses 36,000. That does not belongs to motor car, but the expenses incurred for motor car to motor car expenses 32,000. 36,000. Now we can go for the last thing, which is capital account already been completed, right? 16 lakhs 20,000. Now what is the remaining thing is the gross profit, net profit, and also the total of balance sheet. Let us have your gross profit of 22 lakhs 44,000 plus 4 lakhs 40,000, which is 26 lakhs. Let me write it with another pen. So this is 26 lakhs 84,000. Same thing here, 26 lakhs 84,000 minus 6 lakhs 20,000 minus 13 lakhs 34,000 minus 12,000, which is 2 gross profit. I'm writing with another pen so that there is a difference for that. This is 7 lakhs 18,000, and here by gross profit we can have by gross profit, which is 7 lakhs 18,000 plus 16,000 we need to do minus the total is 7 lakhs 34,000. This is 7 lakhs 34,000 and minus we need to deduct all these expenses minus 66,000 minus 33,000 minus 12,000 minus 1 lakh 10,000 minus 21,000 minus 24,000 minus 1 lakh 20,000 minus 13,000 minus 20,000 minus 18,000 minus 22,000 minus 30,000 minus 16,000 minus 36,000. One second. Right, the same which we have got, that one is 1,73,000. But let's do once again. 7 lakhs 34 minus 66,000 minus 33,000 minus 12,000 minus 1 lakh 10,000 minus 21 minus 24 minus 120 minus 1 lakh 30 13 only 13,000 minus 20,000 minus 18,000 minus 22,000 minus 30,000 minus 20,000 minus 16,000 minus 36,000, which is 1,73,000, which is net profit. To net profit 1,73,000. So to which is to be added here to net profit here 1,73,000, and let us add with 16,20,000 minus 1,20,000 minus 40, 16,33,000 here plus 4,30,000 plus 11,000 20,80,000, and we shall deduct with the balances of assets minus 5,70,000 minus 1,80,000 minus 1,70,000 minus 1,60,000 minus 4,40,000 minus 8,17,000 minus 3,000 minus 14,000 minus 26,000. We get the same zero we get, so 20,80,000 will be the value. So this is what we need to solve. uh, do the problem very neatly and carefully. We need to solve this problem. Thank you for watching. If you like my videos, please subscribe, please like and share and subscribe my channel, and we are going to discuss in next video, right, the practical question number 1 from the final accounts in next video. Thank you friends, thank you for watching. Bye.